watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Joining me on the show is Agam Vakil. Agam will speak about the FNOQs. I'll talk about the general trade setup. If you're looking at what happened with the global markets yesterday, the close was pretty decent because across the board, if you're looking at the US markets, they ended with gains of almost over 1%. Most of the European indices managed to end with a positive bias, and Asia is doing well in today's trade. Let's take a look at the SGX Nifty, which will give an indication of how we are likely to open. That has opened with a positive bias. It's come off the day's high, but nevertheless, we're trading close to the 10,650 mark in trade. The big talking point will be HDFC Bank. Just look at the ADR and how it ended. It ended up almost 9% since the local, the FI window in the local markets has been scrapped. So there was accumulation that was happening on the ADR side, and most likely the buying will continue on the Indian side. Most of the other ADRs managed to end with a positive bias, except for Tata Motors and Wipro, which were down in trade. Now, crude was up almost 3% in trade overnight, so that managed to move up. Little bit of profit booking seen on crude, currently down almost 0.5%. So Brent is, if you're looking at most of the base metals, that also managed to end with a positive bias. So zinc and nickel were up almost 1.5% in trade. Even tin was up almost 0.7%. What didn't do well was basically aluminium, copper, and lead, which were down in trade. Even if you're looking at what's happening in China currently, most of the commodities in China are trading with a positive bias, except for copper, which is marginally weak in trade. Precious metals trading absolutely muted in today's trade. Let's take a look at how the fund flows panned out. FIs were net sellers in trade yesterday. DIs were net buyers. So overall, on a month-to-date basis, FIs have sold 8,000 crores. DIs have bought in excess of 15,000 crores in the cash market. Some of the sectors in focus. Let's take a look first at the Nifty. The Nifty was down 18 points. The mid cap and small cap also saw a little bit of selling pressure that came in. Among the sectors that you need to watch out for, the PSU banking index continues to do well. It was up another 0.5%. The pharma index was weak in trade. It was down almost 1% in trade. The VIX managed to move up by 2.6% given the fact that the markets was volatile. And if you're looking at how the contribution happened, ICICI Bank, HDFC caused the drop in index. L&T, after a strong number, managed to cool off and was down in trade yesterday. But HDFC Bank was and M&M were the two counters which led significant amount of support to the Nifty in trade, and HDFC Bank again will be in focus because of the ADR move that came in. But Agam, what are you spotting?
Sure, Darshan, we did see some consolidation come through. It was a very quiet day of trade indeed, ahead of expiry, and rollovers at around 42% for the Nifty, at around 52% for the Nifty Bank, where there were more traders willing to carry their positions forward. In India, volatility index remained around the mark of 13.4 to be precise. And when it comes to the other factors, that is the changes in open interest, what we've really seen is, well, a little more writing around the 10,600 call and the 10,500 put. There is a likelihood that we may see the expiry above the 10,500 mark based on the accumulation of open interest that we've seen in that 10,500 put yesterday. Moving in, we have GMR Infra, IDFC Bank, as well as Reliance Communication moving into the FNO ban, and this is likely that will only be for today, considering today's expiry, and Jet Airways moves out of the ban. In two other stocks that I'm watching out for, first one is Tata Motors. There were fresh shorts building up in this one, and the second one where we did see some strength come through was Power Grid. That were up 1.5%. We saw some accumulation in open interest across across series, and that's the reason why we've seen some longs come through. That said, let's now go across to Paul Allen for the top international headlines.
Morgan Stanley CEO James Gorman says he doesn't think the Eurozone is in jeopardy over Italy's leadership crisis. However, he's told Bloomberg Television that it's the type of political risk that could disrupt global growth. Gorman also told us he doesn't think the US is trying to start a global trade war, and despite the geopolitical turmoil, he still sees the Fed hiking 4 times this year.
All the Fed is trying to do is get back to a normal rate environment, which gives it monetary power if and when the next crisis occurs, but it's also just right to keep the economy in balance. So the inflation target hasn't been hit. My gut is the Fed will raise rates 4 times this year. I might be wrong, it might be 3, but my gut is it'll still be 4.
We're seeing more signs of a slowdown in Japan. Factory output rose less than expected in April, adding to concerns after a contraction in the first quarter. Industrial production climbed 0.3% against forecasts of 1.4%, which was also the gain in March. Output is projected to have risen 0.3 this month and to fall by 0.8 in June. The European Union is bracing for a trade broadside from Washington after reports the Trump administration is poised to impose tariffs on steel and aluminium. The president slapped duties of 25% on imported steel and 10% on aluminium back in March, but granted a reprieve to the EU and some other countries until the end of May. EU leaders are still trying to find a solution.
I'm always very hopeful and I'm lucid because some things depend on me, some others don't. So I do my best and what I can do. But I will strongly defend here multilateralism.
Italy remains without a government as the president waits to hear from the populist parties that denounced him as an enemy of democracy. Sergio Mattarella wants to know if Five Star and the League are ready to revive their potential coalition 3 days after he torpedoed their pick as finance chief. Several parties are now calling for a new election, possibly as soon as July. Global news 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
Well, back to local equity markets. Talk of the day is Bharat Dynamics. Well, a defense equipment manufacturer with a market capitalization of more than 7,000 odd crore has reported strong set of numbers. Look at the revenue. We're looking at a 22% uptick there year-on-year basis to a number of more than 2,000 odd crore as compared to 1,600 crore that we've seen in the corresponding quarter. If you look at the EBITDA, it's a strong show that we're looking at, more than 120% jump there, 385 crore as compared to 174 crore in the March quarter. Margins too have shot up for this company at 19% as compared to 11% in the corresponding quarter. We've seen a sharp jump coming in the profitability, a more than 4 times jump at a number of 337 crore as compared to nearly 85 odd crore. What has led to good set of numbers? Cost saving techniques undertaken by the company has led to good operational show. Raw material expenses, that is a percent to your net sales, importantly has come down to 48% from 61%. Also, employee benefit expenses as a percent to your net sales, they have declined too to 9% from 11%. But then the sharp jump really is coming in from the other expenses, which have actually come down to 2.8% as compared to 17.6% in the corresponding quarter. Now, apart from higher EBITDA, we have seen lower tax outgo, which has led to a sharp bump up that we have seen in the bottom line front. Tax expenses have come down by as much as 53% for this counter. But if you look at the yearly performance, well, it's a decent set of numbers, at least on the top line. Seems to be a muted on the top line. 6% growth is what we're looking at. Also, if you look at the EBITDA, it's a 17% uptick there. Margins at 15% as compared to 12%. However, the net profit for the company has been flat year-on-year basis.
Let's get your check on the commodity space as well, starting off with oil prices. Currently looking at some bit of softness in oil prices, but remember that this is on the back of a 2.5% surge that we saw overnight, primarily on account of weakness in the dollar index and also the output fears that have seemed to ease. So the focus clearly remains on OPEC and whether or not it will raise the output going forward. As far as inventory data is concerned, API is expected to report an inventory build-up of nearly 1 million barrels for last week. Shifting focus to the precious metal space, we saw some bit of uptick in gold prices. Once again, dollar index played a huge part in that, and also that data showed the US economy actually grew at a slower pace than it was expected to. As far as base metals are concerned, the index itself on London Metal Exchange, that climbed for the second straight day. Now, investors are clearly assessing the risks that are associated with the political scenario currently going on in Italy. On account of that, copper fell for a second straight day and is in fact now down 5.8% for the year itself. While aluminium and lead declined on London Metal Exchange, we had nickel, zinc and tin which gained on the London Metal Exchange. Now, if you look at the Shanghai Futures Exchange, most of these base metals have in fact started on a positive note.
A bunch of stocks that we're tracking this morning begins with Atlanta, where the statutory auditor Pricewaterhouse has actually resigned from the company with immediate effect. Also, KNR Constructions, that's another stock in the list, given that the company has bagged a HAM project worth 1,144 odd crore. And also, Tata Steel is expected to remain in focus, given that the rating outlook has been upgraded by Moody's to stable, from stable to positive. Also, it has said that the Bhushan Steel buy is a positive for the company. It might just see some deleverage ratio going higher, but then it might just recover going back. Also, we have HDFC Bank, which is expected to remain in focus, given that Macquarie has said that the FIIs are expected to lap up as much as 6,500 crore of shares on June 1. Power Grid plans that company is planning to raise a 2,000 crore funds via masala bonds. Also, in list of earnings that we have apart from Bharat Dynamics, we have Mishra Dhatu, which has reported good set of numbers. Revenue up 14%. We're seeing a strong operational performance coming in, because of which the bottom line has reflected by, well. 72% uptick there. KNR Construction, yet another road player which has reported good set of numbers. 30% uptick on the top line front. We're looking at a 54% jump on the bottom line front. This is mainly on account of the healthy operational show. We're seeing the margin soar to 19.3% as compared to 15%.
I think there are two things to talk about here. One is the conduct of the board, which is not equal to the conduct of the CEO, and the conduct of the bank and the conduct of the CEO. These are all three separate entities, so you have to look at all of them. I think the board, when the first statement came out, when it was a statement of unequivocal support, a lot of people questioned whether the bank's board had looked into this deeply enough. The board said it had looked into it deeply enough, but they hadn't informed the exchanges that they were looking into such allegations against the MD and CEO. Then MK Sharma said that, we have done our inquiry, everything is fine, there are no issues of quid pro quo. When he came out in front of the press, he could not answer a number of questions. In fact, he confirmed that Chanda Kochhar had not recused herself from dealings with the said companies, the Videocon group in particular. So there were a lot of questions doing the rounds as to whether the board had done enough to actually sort of protect the bank and not the leader of the bank. So in today's statement, the board has partially redeemed itself, because it has now acknowledged and publicly informed investors that yes, we have another complaint, a second complaint, and we are now looking into this. So we are getting in an independent person to head an inquiry. This is different from an entirely independent inquiry, because that independent person is going to be appointed by the audit committee of the board. Also, the audit committee is responsible for defining the terms of reference of this committee that's going to look into these allegations and the period over which they investigate. Remember, these are loans which date back many, many years. So the caveat that the terms of reference and the period of inquiry will be determined by the audit committee is something to take note of. But let's give them the benefit of the doubt, and let's assume that this inquiry is entirely independent, in which case, yes, the board has partially redeemed itself. But has Chanda Kochhar's position weakened? And to our mind, Chanda Kochhar's position has actually weakened. The reason we say that is this. There is now a second allegation of a similar nature being made, that there are conflict of interest issues, that there have been quid pro quos in dealings with large corporate houses. For the leader of India's second largest private bank by assets, that is not a good allegation to have hanging over her head. And also now, one could assume that the board's support is a little bit more nuanced, given that they have put out this statement today. So if you take those two into account, take into account that a whole host of inquiries are still pending, then I think the assumption is fair that Chanda Kochhar's position is still shaky. The board may have managed to redeem itself partially.
MSCI has come out with a new framework for markets accessibility, and this is a consultation paper which it seeks comments from all its clients. The clients are expected to come out with their comments by November 30th, and by the end of the year, MSCI is expected to come out with a decision. What the basic objective of this consultation paper is to seek investors or allow investors to have broader access to investment instruments. It also looks at any alternatives of either excluding fully or including fully any country in case there are some restrictions imposed by that country. Currently, there is as part of the restrictions, MSCI comes and downgrades that country from one category to another one. The MSCI seeks to bring in some kind of framework for this purpose. The concern is that in the recent past, especially in the case of NSE, monopolies and national monopolies and legal standings have led to countries curbing offshore instruments in other countries, and this in turn is reducing the accessibility of instruments available for investors globally. Countries which are under review as part of this framework would be Brazil, India, China, A-shares, and Korea. What MSCI is very categorically stating is that in the case of India, there are restrictions on certain offshore instruments being put up by exchanges based on certain indices, and the second one is the the lengthy and burdensome regulatory regime wherein foreign investors have to come and register with market regulators SEBI. The proposal, what MSCI is proposing is that in case the participants agree, then MSCI is willing to cap the weightage of that particular country in case of market restriction comes in, and that would mean that within the entire index, there will be a limit to which any investor can invest in a particular country. Currently, as the weightage goes up, funds increase their exposure to certain countries, or as the weightage goes down, they decrease the weightage in certain countries, and this is what MSCI is trying to bring in some kind of cap in terms of some weightage here. The entire proposal, which is available on this website of MSCI, clients are expected to come out and give their comments on it by November 30th, and by end of the year we should be having a new framework which MSCI would be putting out.
Well, ONGC was the last Nifty company to come out with its numbers, and the company has reported a weak set of numbers in the fourth quarter of financial year 2018 on the back of lower than expected volumes and higher costs. Now, if you see the headline numbers, the revenue of the company was up by around 4% to close to 24,000 crore rupees, while the net profit was higher by around 18% to close to 5,900 crore rupees. The EBITDA of the company was down by around 23%, while the margins contracted to 35% versus 47.5% reported by the company in the last quarter. On the operational side, if you see, the net realization stood at around $66.7 per barrel, while the crude oil production and the gas production was down by around 2% and 3% compared to the last quarter. So what led to this? Now, analysts were expecting the crude oil and gas production to remain flat, but it declined compared to the last quarter due to a maintenance shutdown that the company had seen in the fourth quarter. On the financial side, if you see, it was an operational miss on account of higher exploration cost and higher other expenses. Now, exploration cost rose by around 89% compared to last quarter due to higher exploratory drilling expenditures, while other expenses were higher by around 34% compared to last quarter because of higher workover expenses. However, on the positive side, if you see, higher other income and lower tax expense boosted the bottom line of the company in the fourth quarter of financial year 2018. Now, other income was higher by around rose 3 times to 3,700 crore rupees because of the dividend income that the company received from HPCL and Indian Oil Corporation in the fourth quarter of financial year 2018.
Well, let's get your check on the top stocks to buy or sell based on the highest delivery buying and selling as of yesterday. The first stock that you have on your list is Dilip Bilcon. Now, that was down about 13% in trade and saw delivery selling of more than 100 crores. The delivery volume surged 150% at nearly 11 lakh shares as compared to its 5-day average, and the total volume surged more than 4 times at about 52 lakh shares as compared to its 5-day average. Second stock to watch out for, that would be LIC Housing Finance. Now, that too was down about 2.5% and saw delivery selling in excess of 130 crores. The delivery volume surged 120% at nearly 28 lakh shares as compared to its 5-day average, and the total volume surged about 84% at nearly 39 lakh shares as compared to its 5-day average. Last and final stock to watch out for, Jubilant FoodWorks. Now, that has been in action in the last few days. That was down about 2.7% and saw delivery selling of more than 200 crores. The delivery volume more than doubled at about 8 lakh shares as compared to its 5-day average, and the total volume also surged about 130% at nearly 38 lakh shares as compared to its 5-day average.
On the big brokerage calls for the day, first we have is Prabhudas Lilladher or ONGC. Now the brokerage has maintained its buy rating on the stock but has raised the target price to 257 from 238. Now according to the brokerage, higher other expenses dragged the fourth quarter profits for the oil explorer. Now along with this, maintenance shutdown in one of its platform impacted the volumes of the company in the fourth quarter. However, the brokerage has still increased the target price as it has hiked the FY19 and FY20 earnings estimate to factor in higher oil prices for the company. Lastly, it expects the earnings of the company to improve on the back of higher gas volumes going forward, along with improvement in its crude oil and gas realizations. Second, we have a CLSA on Torrent Pharma. Now, the brokerage has maintained its buy rating on the stock but has cut the target price to 1,610 from 1,650. Now, according to the brokerage, the fourth quarter EBITDA was impacted by one-time expense of close to 50 crore rupees related to the Unichem acquisition. Now, along with this, also the interest costs and depreciation charges were higher than expected for the company, according to the brokerage. Now, in FY18, the US sales have bottomed out for the company while the Europe sales remain strong. However, going forward for FY19, the brokerage is expecting the India growth to pick up, while for the Brazil market, it is expecting some headwinds because of the slowdown in the market. Lastly, the brokerage still remains positive on the stock due to strengthening of its India franchise.
Several stories you'll find on the website bloombergquint.com over the course of the day. You'll find all the live market action, of course, but here are just a couple of the stories. Credit rating agency ICRA has downgraded multiple debt instruments of IFCI after the state-run infrastructure lender's balance sheet deteriorated further in the fourth quarter. And R. Venkataramanan, the non-executive director of Air Asia India, who was named by the CBI in its bribery investigation, has denied any wrongdoing and termed allegations against him as baseless. He's also the trustee of Tata Trust, which is the majority shareholder in Tata Sons. All right, that's all you need to know going into trade today. Up next is Indian Open. Thanks so much for watching. This is Bloomberg Quint.